Well, hello folks, I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today, what does it tell us about the coming ones. Do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel L.A. Little. If you want to subscribe, just reach up there, hit the subscribe button, contents pushed to you. The site, then you get a notification. It's an easy way to stay up to date with what we're doing and what these markets are doing. As far as what happened today, it was nothing again. I mean, it's all week, it's nothing. We're coming down to the employment number, the big number tomorrow. And, it all's kind of wrapped up on it. So tonight we're going to do something a little different. Instead of trying to look at what happened, we're going to look at what might happen. Because we're kind of at a key point here, and really the what happened is still the same as it's been all week, and that's pretty much nothing. I tried to get a little pullback today. If you remember last night, I said my trader sense was that we try to pull back today. Yeah, well, we got down like what, 0.29, 0.31 was the worst. Russell was actually green, and nobody wants to give anything up. Same old story, right? If you look elsewhere, you got oil hit, you had the gold hit again, the gold stocks got hit, you had Europe up, and you had Asia struggling to maintain. So it's that same story, and that story's all about the dollar, and the dollar keeps trying to rise. It did it again today. It's been up big all week long. So let's take a look at the dollar to start with. So if we pop over here to the dollar, another stretch up here, a little higher high, a little bit of volume coming into it. I don't pay a lot of attention to the volume here, but it gives me some sort of a read as to what's going on. Because this ETF, they do volume, but, most of the stuff happens on the Forex, not on these ETFs. So it's over the swing point high, does it on this big wide price spread bar. That was the Fed bar. Pulls back and then starts to take off, gravitate higher, and if you look at it on the weekly, right, it's going after these swing point highs, and it looks to me like that is definitely the target. 25.43. The number here is 25.18 was the low, 25.55 was the high today, and 25.69 is the high. Sorry, I was looking at the wrong one. 25.67 and 69. So dollar making another attempt to make the run, and if you look at the dollar on a long-term move, right, the dollar had consolidated for a long period of time, right, broke out over these bars, and then once it did, right, it was off to the races. And now if you're a classical technician, what you're doing is you're looking at this and saying, okay, this is kind of like a flag pattern, right, where you have the move up and then you build a little flag. And that's kind of the way it is. It's consolidating. If you come over that area and you start breaking out, all you got is the swing point high up there to stop you. And believe me, when prices get up here again, and I assume they will at some point, then we're going to see some pressure again on these markets like we've seen it before. Because it's going to cut into earnings. There's just no way for it not to. Of course, with the dollar doing its thing, that puts pressure on the emerging markets. That helps Europe because the euro goes down. And for the most part, it doesn't seem to matter what happens here in the U.S. These markets just try to go up. Here's the S&P 500. So you got a little bit of a roll. But, we've seen this story before. It's the same little story we've seen all the way up here. Hesitation, spike. Hesitation, spike. Hesitation, spike, spike. Are we going to get another spike? That's the setup. It's the setup that we've seen all the way up on this stair-step move. And each time, and you can draw it multiple ways, right? I mean, these are really like ABCD structures as well. You've got this huge ABCD structure in place here because you didn't get much of a pullback. That makes for a very strong move. That point's still quite a bit higher. And then inside that, you're getting these little ABCD structures on the way up, right? One after another on the way up. And it keeps fulfilling them as it goes. And that's a powerful market. There's nothing else you can say about it. I mean, when you don't give anything up and you just stair step it up and you don't let anybody in, that's a powerful market. That's just money wanting to come into it any chance it gets. Now, let's play the what if. So what if tomorrow, right? We've got the employment number. We've had the Fed speakers this week. Well, we had the Fed last week basically tell us, they're thinking that they're going to be able to raise. And then this week they're actually consolidating that thought through all these speeches that you keep hearing. You had 3 of them yesterday, including Yellen. All 3 of them singing the same tune. You had Lockhart today. He was singing the same tune. So you've got all these Fed speakers telling you the same thing, basically. And that is that now the term is it's live. December's live. They're saying that basically they're going to try to raise the rates finally. Well, yip-de-doo, right? It's about time. But, leaving that aside, what if? What if we actually get an employment number tomorrow which is strong? And this is sitting right here at the breakdown bar. That's your breakdown bar. You're sitting at the top. You've made the huge run off the bottom straight up into it. Are you going to get some sort of a pullback off that employment number? Because that employment number, you got to assume that employment number is going to seal the deal if it's strong. And so, go back to September. They didn't raise rates in September because the market was cratering, all right? The market was down here. They're not going to raise rates down there. So what do? Well, they hold on to it, and now the market's back up here, so they can actually, quote-unquote, raise those rates finally. Well, maybe, maybe not, but it certainly looks like that's what they want to do, and that's what they're telling us. So if we get a strong one, that says they're going to raise rates, basically, and what is this market going to do with it? Is it going to spike again and go after these highs, or are you finally going to see some sort of a pullback off of it? I don't know the answer, but I think that's the question. And that's what we're going to see take place. And the key part of it is if you do see a spike that holds, right, that's going to break the breakdown bar. And that pretty much tells us these things are going to new highs, and they're probably going much higher than new highs. And it doesn't mean it has to go straight on up there, but that's what eventually it's going to do. And so that certainly tells you, if you don't know which side of the tape to be on at this point, that's definitely going to tell you which side of the tape to be on. Of course, you're going to be a little late getting there, but it's a fairly clear signal if it does it. I believe that the way we're going to get a pullback is one of 2 ways. Either we're going to get some exogenous event come at us, or you're going to get something like tomorrow where they spike it up here, right? Everybody wants to pile in, and then they turn it around and spike it right back down. Take it up to take it down. And I wouldn't be surprised to see that. I mean, the setup is here. You've had the huge run. You've got everything going. Everybody wants to get in. As soon as that employment number hits, and actually tomorrow, think about it. I mean, the employment number tomorrow is probably going to get bought. I don't care what it is. If it's bad, it's going to get bought because the Fed's not going to raise rates. If it's good, it's going to get bought because it's already, quote-unquote, priced in. Well, they're going to spike it, and then we'll see if they hold it or not. Because if they don't, then you'll see the money rotate out, right? Come out of this stuff, let it pull back some so that they can buy it cheaper. Nobody wants to buy it higher and higher. They buy it higher and higher because everybody else keeps buying it. At some point, when it rolls fast, you get a decent setback, and then you go up again. So that's the weekly. That, to me, looks like the potential setup. I don't know if it's going to spike it and come back, but I'd be concerned about that case because that's a likely case in this kind of a setup. If you look at the Nasdaq, now the Nasdaq is still holding. Here's the daily, but let's go to the weekly. This Nasdaq's still holding over that high. 50.92, and you were closing here at 51.27. So you're like 30. What is that? 35 points. So that's a good 6%, 0.06%. So a little over 0.5% higher right now. Can that one hold? Again, if it holds, that pretty much tells me we're going to new highs. And as you know, we've already gone to new highs on the NDX. I mean, the indexes are sitting at the new highs. And the only question here on the weekly is, does it hold? Right? You haven't broke yet on the weekly, and so that's the question. So if you spike tomorrow and come back, that's a failure on a bunch of these markets, right? And that would be kind of a uniform failure. You need to actually get some sort of a turn back down the other way. If they hold it, it's a totally different story. That says they're going to go higher, and they could do it immediately because there's just not much to stop it after that. Russell. The Russell is the one that's telling us that we're going to try to pull back a little bit. It's the only one being given a signal, and that signal was, it wasn't a great signal, but it was a signal, and that is that it's coming into the swing point high, and it can't get over it. All right, keeps testing it, can't get over it. And so the Russell was the only one saying, hey, we should see this thing try to pull back. Russell did try to pull back, and if you look at the numbers on it, the Russell pulls back to 1179, and what's this number here? 1178.78. Comes back to it, doesn't have as much volume, flips it around, does a little hammer reversal. Russell, along with everything else tonight, is telling this market it's going to try to run higher tomorrow. If you look at Europe, Europe can go higher. If you look at Asia, right, Shanghai is definitely trying to go higher. Everybody else is just kind of, doing their thing, nothing big there. The dollar strength is cutting into Asia, into emerging markets. It's making it harder there than it is in Europe, where you have a rather mature market. What you are seeing everywhere, though, is you're seeing bond prices rise. You're seeing commodity prices hit. You're seeing currencies devalued, the dollar going higher. In that scenario, even no matter what happens tomorrow, that scenario is probably going to continue. And what I mean by whatever happens tomorrow, even if you get some sort of a flip around in that story where equities come down, those things go up, I believe it's going to be a temporary case for all of them. And then they're going to flip around and do the same thing again. The major trends are the ones that you see, and that's higher in equity still, and that's lower in all these other things. And I don't think that's going to change. All right, so that's the what if, and that is tomorrow. And there's no tell. There's really nothing out here to tell us this market's going to pull back. In fact, everything out here tells us this market's going to try to push higher, at least to start with. And so I suspect no matter what that number is, you're going to see this market try to jump on it. Whether they can hold it or not, that's going to be the story. Have a great one, folks. Thanks for joining. Hey, tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great night, and I'll see you Sunday night. Good night, folks.